Now your gateway to financial empowerment and prosperity. We dive deep into the world of finance, law, and strategic wealth management. Our mission is simple: to equip you with the tools and insights you need to thrive in today's economy and leave a legacy of abundance for generations to come.
If you have not filed your taxes for several years, it's important to address the situation promptly to avoid potential legal issues and to mitigate accumulating penalties and interest. Here is a step-by-step game plan for handling unfiled tax returns. 1. Obtain wage and income transcripts. For each year you didn't file a tax return, obtain your wage and income transcripts from the IRS. These transcripts include records of W-2s, 1099s, K-1s, etc. that were filed with the IRS for those years. You can request these transcripts online through the IRS website or by mailing Form 4506T to the IRS. Consider state tax obligations. If you live in a state with personal income tax and haven't filed your federal returns, it's likely you haven't filed state tax returns either. While state processes may differ, you'll generally use the same income information for state filings as for federal filings. Keep in mind, state tax withholding information is not included in federal transcripts, so you may need to obtain this information separately from your state tax agency. Determine which years to file. You may not need to file every unfiled tax return. Generally, the IRS requires you to file the last 6 years of tax returns to be considered in compliance. However, this can vary based on individual circumstances. Let's move to the next steps. After identifying the years for which the IRS has filed substitute for returns, SFRs, your next step is to determine if it would be beneficial to file your own original tax returns for these years. But evaluate tax liability. SFRs often overstate your tax liability as they don't include any itemized or business deductions you may be eligible for. By filing your own returns, you can claim these deductions and potentially significantly reduce your tax liability. Consider professional advice. If you decide to file your original returns to replace the SFRs, gather documentation. Collect all necessary documents, such as receipts for business expenses, records of itemized deductions, etc. Complete returns accurately. Ensure you accurately report all income and claim all eligible deductions. Mistakes can lead to further complications with the IRS. Determine which non-SFR years to file. After dealing with the SFR years, focus on the non-SFR years where you haven't filed your returns. Here are some considerations for deciding which of these years to file. Prioritize recent years. Generally, prioritize filing returns for the most recent years first. The IRS typically pays closer attention to the recent past. Statute of limitations. The IRS has a 3-year statute of limitations for issuing refunds. If you believe you are owed a refund for a specific year, file that return to claim it. However, if more than 3 years have passed, you may no longer be eligible for that refund. Look at balances owed. If you owe taxes for certain years, it's important to file those returns to establish the exact amount owed and begin addressing the liability. Consider compliance. Filing your returns, even for years where you might not owe taxes or are not due a refund, can help bring you into full compliance with the IRS. Step 5. Prepare and file the returns. For both SFR replacement returns and non-SFR years, here's how to proceed. Gather documentation. Use the wage and income transcripts you obtained in Step 1, along with your personal records, to compile the necessary information for each return. Use appropriate forms. Ensure you use the tax forms for the specific year you are filing. Tax laws and forms can change annually. Seek professional help if needed. If your tax situation is complex or if you feel overwhelmed, consider hiring a tax professional. They can ensure accuracy and compliance with the tax laws for each year you are filing. Ensure you're using the correct tax forms for each specific year. Tax laws and forms can change annually, so it's important to use the forms that correspond to each year you're filing for. Depending on the year, you may be able to file electronically. For older years, you will likely need to mail your returns. Ensure that you send them to the correct IRS address for past year filings. IRS correspondence. After filing, pay close attention to any correspondence from the IRS. They may send notices about balances due or request additional information. For future compliance, to avoid falling behind again, ensure that you file your tax returns on time in the future and make any necessary tax payments or arrangements. 6. Address any tax liabilities. After filing your returns, review IRS correspondence. The IRS will process your returns and send you any notices regarding balances due or other issues. Set up payment plans or explore relief options. If you owe taxes, consider setting up a payment plan with the IRS. If you're facing financial hardship, explore options like an offer in compromise or the IRS hardship program. Additional tips. Understand penalties and interest. Be aware that penalties and interest accrue on unpaid taxes. Addressing your tax situation promptly can minimize these additional costs. Monitor your IRS account. Keep an eye on your IRS account online to track any changes or updates to your tax situation. Additional considerations. E-tax liens and levies. Be aware of potential tax liens or levies. The IRS may take legal claim against your assets for unpaid taxes. Filing your returns and addressing your tax liability can help prevent this. If you feel overwhelmed by the process, are facing significant tax liabilities, or have other complicating factors, such as potential fraud or evasion, it's advisable to consult with a tax professional. They can provide guidance tailored to your specific situation and can represent you before the IRS. Request penalty abatement. Once your returns are filed, consider seeking penalty relief for any penalties accrued on your account. While the IRS may not always grant penalty abatement, it is worth exploring, especially if you have reasonable cause or other justifications. Understanding the criteria. Familiarize yourself with the IRS's criteria for penalty abatement. Consider getting professional help to navigate this process and present a strong case to the IRS. Finally, address the balance you owe to the IRS. If you can afford to, paying off the balance in full is the simplest solution. However, if this is not feasible, explore other tax relief options. Offer in compromise. This option allows you to settle your tax debt for less than the full amount owed, but not everyone qualifies. Currently, not collectible status. If you're facing financial hardship, this status can temporarily pause collection activities. Installment agreements. These agreements allow you to pay off your tax debt over time in more manageable monthly payments. Conclusion. Completing these steps will bring you up to date with your IRS filings and address any outstanding tax liabilities. It's important to stay on top of future tax obligations to avoid similar situations. If you're overwhelmed or unsure about any part of this process, don't hesitate to seek professional tax assistance. They can provide the guidance and expertise needed to navigate these complexities effectively.
Thank you for tuning in to Generational Wealth Now, where we empower you with the knowledge to build a prosperous future. If you found this video valuable, don't forget to hit the subscribe button and turn on notifications for more insightful content. Have questions or need personalized advice? Feel free to reach out to us directly. Simple click on the link on bottom of this video. We are here to support you on your financial journey. Until next time, keep striving for greatness and creating a legacy of abundance. Take care.